Will my current account hurt my credit score? Let's debunk this myth. Ever heard that question swirling around the internet? You're not alone. Current accounts, these fancy new fintech apps that promise faster access to your paycheck, have become increasingly popular. But with all the buzz, confusion is bound to arise. One common worry: will using a current account mess up your credit score? Hit that subscribe button and smash that notification bell, because today we're diving deep into the world of current accounts and credit scores. We'll separate fact from fiction, and by the end of this video, you'll know exactly how current impacts your financial health. So, what's the deal with current accounts? Let's break it down. Unlike traditional banks, current accounts don't function like a credit card. You're not borrowing money, you're simply accessing your earned wages a bit faster. Here's the key difference. With a credit card, you're essentially taking out a small loan each time you swipe. You use the money now, but pay it back later, with interest attached. This borrowing activity gets reported to credit bureaus, which in turn affects your credit score. Current accounts, on the other hand, operate on a different principle. You connect your employer's direct deposit system to your current account. Whenever you get paid, the funds are instantly available in your account, instead of waiting for the traditional bank processing cycle. This can be a game changer, especially for those living paycheck to paycheck. Okay, but does Current report to credit bureaus? Here's where things get interesting. Currently, current accounts don't report activity to credit bureaus. Why? Because, as mentioned earlier, you're not borrowing money. You're simply accessing what's already yours. This lack of reported activity might lead some to believe that using current could negatively impact your credit score. Hold on, isn't building credit important? Absolutely. A good credit score opens doors to lower interest rates on loans, better deals on insurance, and even helps with renting an apartment. So, how does current fit into this picture if it doesn't report activity? The good news is, using current itself doesn't hurt your credit score. However, it also doesn't actively build it. Since there's no borrowing involved, there's nothing for the credit bureaus to report. But wait, there's more. Here's a crucial point to consider. Some current accounts offer features like debit cards with overdraft protection. Now, this is where things can get a little tricky. If you use the overdraft protection and end up spending more than you have in your account, that could potentially be reported as a negative mark on your credit report. So, be mindful of these features and use them responsibly. The bottom line: current and your credit score. Using a current account for its core functionality, which is faster access to your paycheck, won't negatively impact your credit score. However, it also won't build your credit history. So, what can you do? If building credit is a priority for you, consider these alternatives. Secured credit card. This is a great option for beginners. You put down a security deposit that becomes your credit limit. Use the card responsibly, make your payments on time, and watch your credit score climb. Become an authorized user. Ask a friend or family member with good credit to add you as an authorized user on their credit card. Their positive payment history will reflect on your credit report. But remember, use this responsibly and only if you trust the other person to manage their credit well. Current can still be a valuable tool. Even though it doesn't directly build credit, Current can be a valuable tool for managing your finances. Here's how. Budgeting. Most current accounts offer budgeting tools that help you track your income and expenses. Avoiding overdrafts. With faster access to your paycheck, you're less likely to incur overdraft fees from traditional banks. Saving. Some current accounts offer features like instant savings pockets, encouraging you to save a portion of your income. The final verdict: a smart choice for many. If managing your cash flow is a struggle, a current account can be a smart choice. Just remember, it's not a magic bullet for building credit. Explore other options alongside current if credit building is a primary goal. With that said, thanks for watching, and until next time.